Here you will discover, if you have not already, that it is an increasing economic imperative for individuals to become owners of publicly listed corporations in order to profit from the fruits of capitalism, entrepreneurship, innovation, and the robust corporate sector. This is more important than ever given elevated uncertainty about the future role of monetary and fiscal policy making, in addition to questions concerning the long-term viability of government-sponsored social programs in the developed world. So here it is, why you need to invest in stocks. Rather than lament the decline of mom-and-pop businesses and bemoan the rise of big corporations, you can instead share in their profits by owning stock in their businesses. Being a shareholder legally makes you an owner of a corporation in an amount proportional to your holding of the company's stock. This entitles you to a portion of the cash or stock dividends that might be paid by the corporation, or in a share of the company's total net worth if it is ever dissolved or acquired. Corporations are organized for the benefit of owners, and that could be you. So the next time you make a purchase or hear about record corporate profits, remember that you have the opportunity to be on the receiving end of that money. Investors in large capitalization, publicly listed U.S. domiciled companies have on average earned compounded total annual returns in excess of 10% since the late 1800s, despite the Great Depression and 2 world wars. This was earned not by speculators or day traders engaged in market timing or chart reading gimmicks, but by long-term buy and hold investors who maintained their exposure to stocks through all market conditions and reinvested income from dividends for additional capital appreciation. The fact that the past decade has been relatively stagnant for stock prices, despite rising intrinsic valuations for the underlying corporations due to their increased profitability and growth in shareholder equity, bodes well as an indicator of future upward momentum for stocks. By historical standards, now may prove to be a particularly opportune entry point for stock investors. Even as economic growth has stalled in many developed countries, corporations are benefiting from further globalization among free market economies and are profiting handsomely from having major revenue sources that are increasingly geographically diverse. There are now many multinational corporations that derive a majority of their sales from abroad. Such companies are especially well positioned to profit from the high economic growth rates currently being experienced in emerging economies, where the rise of a new middle class translates to higher levels of consumption and investment alike, both positive factors for the investor in companies with significant levels of international exposure. Quantitative easing by the Federal Reserve, meant to bolster economic recovery, has created a surge in the money supply, thus diminishing the yields earned from holding U.S. Treasury bonds to record lows and resulting in higher prices for consumers. This has had the effect of deteriorating the net purchasing power of cash and bondholders' assets over time. Corporate earnings and asset values, however, generally appreciate more during inflationary environments, making stocks the safer income-bearing alternative to owning commodities for long-term oriented investors concerned about inflation. Government-sponsored social programs for such things as supplemental income in retirement, reimbursement of medical expenses, and subsidies for consumer staples cannot reasonably be relied upon to provide for the needs of expected future beneficiaries amid unsustainable budget deficits, debt levels, and an adverse demographic transition. Responsible investors must anticipate that they will be required to support their own livelihoods in retirement and to bear the burden of rising costs for medical care. With bonds and other traditional investment alternatives failing to offer satisfactory long-term expected returns, stocks must comprise a major portion of any investor's portfolio, even through retirement. Furthermore, the market-weighted dividend yield on components of the S&P 500, a large capitalization U.S. stock index, now exceeds the yield on 10-year U.S. Treasury bonds. This makes it a necessity for income-oriented investors to be invested in large companies with a sustainable business model, stable earnings history, attractive dividend yield, solid credit profile, and diverse operations. Guarantee the future earnings power of your savings by investing in the continued prosperity of well-established and shareholder-friendly corporations with favorable long-term growth prospects. Own stocks and claim your share in worldwide wealth creation now.